What is going on, everybody? It's Stas here. Welcome back to another video. So the markets were wild today. It was one of those days. We were green one moment, red the next, then we were back into the green. So we got to break down the markets in this video, talk about some stocks, break down some charts, and we have to go over one earnings report, which is Nike. So if you all find value, hit the like button, subscribe, and make sure to get your free money from Moomoo. You get one free share of NEO guaranteed, and up to 5 other stocks, each of which could be valued up to $3,500. Just use my link down below, deposit at least $100, and boom, you get some free money. And with that being said, let's dive into the video. So SPY ended up closing down barely, 0.03%. You might as well call that a break-even day. Russell went down a whole 1%, so the Russell did get hit today. The NASDAQ went down 0.3, and we had the Dow down 0.6, VIX down VIX was down 1.4, not 0.4, 1.4, and we had gold up 0.3, silver up 1.3. And overall, guys, nothing really changed from my previous video. At this point in time, SPY is still struggling at 448, which was resistance a couple of weeks ago, and we are trading above both moving averages on the 4-hour chart. But for the bulls to continue this momentum, they got to break out of 448. So I have my alert set at 447.50, pretty much right at 448. If that point breaks, like I've said, there we might see the momentum continue. We might fill the gap up to about 456 to about 458 from that point in time. So watch out for this major level tomorrow and for the rest of this week, quite frankly, guys, because this is a very big spot in terms of determining direction. And for triple Q, if I pull this up, let's see what's going on. We're also noticing major resistance at a key level, in this case being around 355. That was resistance in the middle of February, and just like SPY, triple Q is above both moving averages on the 4-hour chart, which it hasn't been above both since the beginning of 2022. So this is a good sign, and for the momentum to continue, it is pivotal, super important for this to break out of 355. So that's why I have my alert at that point, and from there, maybe we start gunning 365, 370. That is where we could be going afterwards. So I don't want to bore you all with a whole breakdown because we did break this down earlier and pretty much nothing has changed. So yeah, just keep your eyes on those levels for triple Q and SPY. And if we take a look at crude oil, let's pop up crude oil and see maybe gold, silver, what those charts are looking like. Crude oil went up 7.6% today, closed above both moving averages on the 4-hour chart, and it clearly seems to be continuing the uptrend, guys. It's looking bullish as ever, and at this point in time, we're about to test 115, which if you guys take a look on this 20-day chart, 115 was that neckline of the Head and Shoulders when we were trading in that Head and Shoulders a couple of weeks, well, not even a couple of weeks ago. It was about 2 weeks, I guess that is a couple of weeks ago, less than 2 weeks ago, 10 days ago, that's where the Head and Shoulders neckline was at about 115. So I'm telling you, if we break 115, this is probably going to go back, I don't want to say for sure to 130 a barrel, but it might start gaining momentum towards that level. Let's just put it that way. So crude oil is looking solid. Very strong day today for the energy and oil markets here. We had gold, nothing crazy. Gold and silver have continued to come down a bit. Well, they haven't come down recently in the past couple of days, but they did come down a good chunk from the 8th of March, and I'm talking about gold here. 8th of March, it went from 2080 down to about 1900 at the 16th of March. So in 8 days, this lost 8%. And silver lost probably more than that in that same time period. Yeah, silver lost about 10%. So these are down a good chunk. But overall, look at the trend. The trend still looks pretty good on the 4-hour chart for silver and for gold. So if you think bulls are done, you might be mistaken. I don't think they're quite done quite yet. So what do you think about that? Drop me a comment. Make sure to smash that good old like button if you haven't done so already, and subscribe if you want to keep up with the content, guys. You're going to want to keep up with the content, so make sure to subscribe and hit that notification bell. And with that being said, let's break down some earnings. Well, just one earnings report, which in this case is Nike, and I did cheat a little bit. I saw the stock was moving up, and by cheat, I mean typically I like not looking at the earnings reports before making the videos because why not? It kind of makes it more fun for me. But in this case, I did look at my Yahoo Finance app and I saw Nike was up about 5-6 roughly percent after market hours. So let's see what's going on here. They did 87 cents EPS versus 71 cents, estimated 10.9 billion versus 10.62 billion in sales. So that's a double beat. It says here cash and cash equivalent short-term investments were $13.5 billion as of February 28th. That's a crap ton of money. And Q3 brand sales were at $10.3 billion versus the $10 billion estimate. Converse revenue, $567 million versus $585 million estimated, so that's a bit under. And we're not getting, like the greater China sales, the different regions here. I'm not seeing it. Actually, never mind. We did get those numbers. I just had to scroll down a little bit. That's all, guys. I almost missed it, but I scrolled down for you all. So let's see what's going on here. Greater China revenue down 5%. It came in at $2.16 billion. Europe, Middle East, Africa revenue, $2.78 billion. That is up 7%. So we're seeing a nice pop. Middle East, Europe, Africa for revenue, which is fantastic. That came in, again, at about $2.78 billion, almost $2.8 billion. Let's see what else we got here. Pacific, Asia Pacific, and Latin America revenue, $1.46 billion. That is up 11%. So a lot of these regions are doing well for Q3 revenue, up a good chunk for Asia Pacific, Latin America, Europe, Middle East, Africa. But again, China, Greater China revenue is down 5%, and we all know how big of a market the Chinese market is. And they're going through some stuff right now. They're going through some troubles. Obviously, their stocks are getting demolished. I mean, their economy is not in the best, tip-top, most perfect shape of all time at this point. So it makes sense why Greater China sales are struggling. So Nike is actually, like I said, moving up after hours on these earnings, pretty decent earnings. And by the looks of it, we're breaking out of not only the 50 SMA on the 4-hour chart, which we've been doing in the past couple of days, but now, after hours, we are breaking out of the 180 SMA, and we're trading above it, holding above it as of now. And of course, as you guys know, things can change. This could easily give back the entire aftermarket gain here tomorrow. Very possible, but as of now, again, it's up 5, 6, 7%, holding that longer-term moving average resistance as support. That's a very good sign. So I'm going to set some alerts. Well, I have one here at 135. Not sure why that didn't hit. Probably because it's after hours, but I'll put another one at $140. You guys can see mark is at or above $140. Give me a second here, guys. You guys can see 140. That was support all throughout the end of January to about the end of February. So for a good month, we held 140. Obviously, we broke under it. It became now resistance, and we're still under it, so it is still resistance. So keep your eyes on 140. If that breaks, maybe Nike fills the gap to 150. That's the range that we traded in end of January through the end of February, right between 140 to 150. So I suspect if we break 140, we might see that little 7-8% push to about $150. So keep your eyes on Nike. Splunk is another one that I'm looking at. SPLK, let's pop this up. Splunk went up 4.6% today in the midst of the markets not doing well. As we talked about in the beginning of the video, markets did not do well today. We had all the major indexes here in the United States go red, and overall, Splunk is looking pretty good. The chart looks solid. We just took out the recent highs. Today we hit almost $134 a share. The highs from last week were around, and the week before that were around 128, 129, 130 a share. So we took the highs out. We're now trading at a multi-month high. If you guys take a look on this 4-hour, and if I draw this channel out, you can kind of see where we're trading. And I think if we take this, we're already taking the resistance of the channel out. There's a lot of upside remaining, in my opinion. We recently dropped from about 176. Well, that wasn't really recently. It was about 4 or 5 months ago at this point. I guess that is kind of recent in the grand scheme of things, right? We dropped from 176 to about 90. It lost 48%, and that's where we've slowly been recovering, and that's been since the beginning of December, and we've been trading in this channel. So I think if we take out, well, we already are taking out the top of the channel, but if we break above, let's say, 135, that's where I'm going to put my alert right now. Mark is at or above 135. There's a wide open gap. 135, that was support back in the end of September, early October, also middle of November. That's now resistance. Again, if we take that point out, there's a wide open gap. 160 is a big resistance coming up. Let's see what else here. 150 to 155. So this could really start gaining some momentum quickly, and we've seen it do it many times. This stock has gone up in the past week over 20%, and this could continue. So set your alerts. SPLK is the ticker. DOW is another one I'm looking at here. Dow Inc. This one up 1.5% today, and we have been calling this out recently, and it just seems like it keeps on playing according to plan, and today was a very good day considering we broke out of the key 62, 75, 63 buck resistance. You all can see that's been a sticking point pretty much since the beginning of February, so the fact that we broke out of it, we closed above it, we had a green day in the midst of a red day overall for the markets, that is great. So the inverse head and shoulders looks to be playing out. The ascending triangle within the right shoulder is playing out as well. So I think Dow goes up to about 65, 66 bucks. That is totally reasonable. 100% reasonable. That gives it about 3, maybe 4% more upside from where we are right now. So that's DOW. Another one I'm looking at is none other than XLE, which ties into the oil chart I showed you guys earlier in this video. Again, oil today did very well. Crude oil up 8% roughly. XLE went up over 4%. Clearly, the uptrend's continuing on the 4-hour chart. We hit 80 bucks recently, sold off to 70. It was just a little correction. We dropped 10%, and now boom, buyer stepped in around the 180 SMA, pushed us now over the 50 SMA. This, in my opinion, is setting up for a break. I mean, it's already breaking out, but it's setting up for a move to test the recent highs, being around 78, 80 bucks. I mean, geez, guys, we're at 76. We're pretty much a stone's throw away from that recent high. I think XLE, based on the momentum we're seeing, and especially, guys, going back to that crude oil chart, especially if crude oil breaks out of 115, I think XLE is going to go up even more than 80 bucks. I think it might even take out 80 bucks, especially if we break 115 and start gunning for the 130 high. So keep your eyes on that XLE chart. It's looking very good. We're only just about 3-4% off the recent highs. So one more great day like today, we're at 80 bucks, just like that. So XLE, watch it. HES is another one that I'm looking at here. This is Hess Corporation. It went up 6.6% today. I'm seeing an ascending triangle on the 4-hour chart here. We've been uptrending for a good couple of months, and just recently, in just the past 3 weeks, we've had resistance between 103 to about 105. That's been a big sticking point. So I think if Hess gets out of there, the ascending triangle breaks out or plays out, we take out 105, this might be ripping to all-time highs again. Let's see where. Actually, let me take that back because I don't even know where the all-time highs are, or at least I forget for this stock where the all-time highs are. Maybe we're at all-time highs now. Let me double check. No, we're not. Of course we're not, guys. This is it's an energy stock. These haven't been on fire in years, right? So Hess, this was at 103 bucks back in 2014. Its all-time high was 137 back in 2008. And again, now we're testing 105, the all-time high from 2014. If that breaks, there's really no resistance until the all-time high from 2008. So I'm going to keep watching Hess around 105. I'm telling you, if it breaks that point, it might not go all the way to all-time highs from 2008, which again, we're at about 130 bucks. It might not go all the way to that point, but could it go to 110, 115, heck, 120 plus? It sure could, guys. It sure could. So watch out for HES. Coca-Cola KO is another one that I'm looking at here. This chart looks pretty decent. Today it went up 0.8% in the midst of a red market. We broke out of the 50 SMA, and now we're fighting with the 180 SMA on this 4-hour chart. One negative thing I am seeing is this death cross, the 50 under the 180 SMA. That's not the best sign, but if we break out of this 180, we start gunning for the mid-60s, it doesn't even matter at that point. Just because we see a death cross doesn't mean 100% of the time the stock's going to go down. It doesn't work like that. I wish, because, it'd be way easy at that point, right? It'd be too easy to trade if that's how it that worked. And clearly, Coca-Cola doesn't really care about the death cross because the death cross occurred about a week ago, and we've been going up ever since. And now that I'm looking at it, the death cross was probably, it occurred because we had such a rapid drop from 63 to 57. We lost about 9% in just 2, 3, 4 trading days. So that's what caused the death cross. Now we're getting that violent snapback. And again, if we break $61, I'll put my alert right at 61. That is where we could start breaking out even further, maybe to 63, maybe even higher than that. So watch out for KO. And to end off this video, I'm going to talk about a bear trade here, SQQQ. I've talked about this a lot. I've traded this a lot in the past. In fact, today I traded the inverse to this, TQQQ. And you guys in my Patreon know because you get all my real-time buys, sells, call-outs, videos, morning updates, all that good stuff is on Patreon. If you guys want to join it, linked right down below. Shameless plug there. I traded the inverse of this today when QQQ had that nice pump in the morning. If you guys remember, if I pull up this intraday chart, we got a nice V-shaped pump this morning after selling off aggressively. That's where I traded TQQQ, which goes up 3 times what QQQ goes up, right? But if I want to trade QQQ going down, I'm going to have to trade SQQQ, which goes up when QQQ goes down. So I think if we do end up getting more red in the markets, you guys have to be able to make money in both directions, right? Very important. If we do get more red and we fail breaking out of 355, and let's say we dump under these moving averages, we start gunning under 340, which would not be good. It would not be good overall, but again, with SQQQ, we'd be able to make money. And this thing is down 30% in the past couple of days as we've seen the bounce back overall in the market. So this could very well be a dip buy. I'm not rushing it and loading up. I don't like buying these heavily because they're very risky. They're leveraged ETFs, guys. I go small when I trade these, and I'm in and out very quick. I don't really hold them for multiple days. Sometimes I do, but for the most part, it's just for a day, a quick little day trade like today. And I figured, let me mention it. If you guys don't know about it, watch out for it. This could be a nice way to make money if we get volatility back in these markets, which I would not be surprised if we do. And if we see that dump off in QQQ again, if we fail breaking out of 355. So overall, guys, that's it for this video. I hope you all enjoyed it. If you did, hit the like button, subscribe, drop me a comment, and make sure to join my Patreon if you want all my buys, sells, call-outs, all that good stuff is linked right down below on Patreon. Or you can go to StockSurfFest.com/Patreon to join, and make sure to get your free money from Moomoo. You get 1 free share of NEO guaranteed and up to 5 other stocks, each of which could be valued up to $3,500. Just use my link down below, deposit at least $100, and boom, you get your free money. And with that being said, I'll catch you guys in the next video. Thanks for watching as always. Peace out.